a day. Try to run, try to hide. We're gonna do.
Good morning, traders. We have our doors music trying to get our mojo going for the FX markets today. It has been slow trading so far this week, where if you're into the long grinding trade where you risk a lot for little minimal moves, it's the way to go for you. The only pair that we have seen any confirmed actual strong price movement out of is the USD Yen Cross, or the yen crosses in general, to tell you the truth. The yen has pushed higher, as we spoke about earlier in the week. A move above 78.70 would mean that we most likely get a push towards 79.15. Now the pair is trying to establish itself above 79.15, and that could lead to a move all the way up to the 80 level. Now nothing goes up in a straight line, so I would expect a little bit of pull and push and pull at these levels, because we're almost up 50 pips, and for this pair, that's a major move. The yen cross, interestingly enough, was the most volatile of all the majors yesterday, and you don't see that very often. And so what we're going to look at here is, the question is, why is the yen going up? The yen is moving up with expectations after the stronger data out of last week, or in early this week, with retail sales and so forth, that at Jackson Hole, we may not get an announcement of further quantitative easing. That may be pushed back onto the back burner. And this has made U.S. Treasury yields go up. And with increased Treasury yields, we get a move up in the yen. And the reason being is that Japan are one of the biggest savers in the world, and most of their holdings are domestic, but in domestic bonds, they get almost no return because of the zero interest rate policy Japan has had for the last decade or so, maybe 2 decades. So if we get continued good news out of the U.S., it's going to push the yen higher. And this, we can see, has moved the yen higher across the board against the CAD, moving up a resistance. New Zealand breaking into resistance zone. The Aussie pushing towards the highs. The pound pushing higher. And the euro pushing higher, euro yen. So it's a positive all around the board. Now let's take a look at the more commonly traded pairs that we take a look at least to start the day. And we have our majors. And first, we're going to look at the Euro USD. As you can see, the Euro USD has been playing a game of fibs lately. It's not an exciting game to watch. It seems the pair seems to break down in Europe, bounce back break down in Asia, bounce back in European, and kind of baseline in North America trade. That's been the theme so far this week. And so you can see the pair move down exactly to the 0.618 fib from the most recent move lower, which came in at 122.53, and then it's bounced, getting its legs underneath it, trying to make a move probably back up to the 123, or maybe even up towards the 123.85, 124 level, we're going to say. At this point, I don't really have a bias in the price action of the pair, but I will watch the data that comes out with the housing starts and the jobless claims, and that could give me an indication. I mean, you could go long right here, right now, if you really wanted to, and just put your stops below this current level around 122.54. It's not a trade that I'm really interested in, because I'm not really confident that I have an accurate gauge or an advantage in the price action at this current level. But you could see that the pair has been just basically drifting lower for the last couple days. So any break of this 22.44 level, though, that will be revealing, and we could be on a quick move down to the 21.30 area. The Great excuse me, I have something in my throat today. The Great Britain USD pair moved higher after data came out this morning, and it was encouraging for the Great Britain pound. We had retail sales come out at 2.8%, which was actually better than expectations, and auto, basically across the board, it came in better than expectations, beating many negatives, and it could be an indication that they're coming out of the doldrums that actually the retail sales came at 3.3%, excuse me, the doldrums that has contained the pair over the last the Japanese, the Great Britain pound, the the English economy has been contracting as of late, and for the last couple quarters has put in negative prints. It's closing into actually depression status over there officially. As we can see, though, the pair moved down again last night, and it tested the 156.60 fib level. And as I've said, as long as the pair stays above this 156.60 level, I'm looking for a move back up to the 50 fib, which it has never reached from the May lows at 157.82. If we look on the daily chart, you can get a better indication of what I'm looking at. 157.82 from this complete move down in May. If we get up to that 157.82, we could see sellers come in. So what we're going to watch for is any move back down to this area at 156.60. Put your stops below, maybe at the 156.30 level, and looking for a pop up to 157.82. That's a trade setup that should offer a nice risk reward level. The Aussie USD, as you can see, this baby has done nothing. It has just been flatlining. It moved down to get the stops. 105 is the level to watch. Right now, I'm just watching 105 for a pivot. If we get a confirmed break, we could be going down to 104.30. If we get back above, we could go to 106.30. And all these pairs, it's getting towards the end of the week. We've had almost no price action, so we should see a squeeze one way or the other to finish the week up, so people can walk away with a smile on their face over the weekend, traders. So keep your eye open for that. We should get price movement sometime today, tonight, or in early Friday trading. New Zealand USD is trying to make a run right now, higher, 80.60. As you know, I was short yesterday. Towards 80.60, it moved down just low enough to get my stops at 80, around 80.40, and now it's rebounding higher. As long as I've been saying this for the last week or so, as long as the pair is above 80.60, my bias is for a move higher and ultimately up to the 82.35 level. It's interesting to see that New Zealand is moving higher, but we don't really have risk on. Well, the euro's going a little bit higher too. The CAD still pushing higher, pushing lower, which is kind of interesting, knowing that New Zealand and Aussie or so forth are moving higher, and euro it's trying to hold the 99 level. Basically, we have this resistance zone right here between 99 and 98.70. That's going to be the level to watch. If we break below that officially, the decline could decrease, but it would also be a move down lower in risk in general. Our first target on a downside would be 98, then 97.25. But if we do get a rebound at this level, 99, we could quickly move up to test 99.50 and 100. You could go long right now, right here, and have your stops below this resistance zone. I'm not really sure. With this pair, it seems to be stubbornly moving lower, so I'm going to stay away from that. But any move up towards the 99.50 or actually more importantly, parity, I would be looking to short there, looking for a continued move lower. The yen pair we've already discussed, but it is above. The new support is going to be right here at 79.15. You could go long there, looking for a continued move higher. I expect a little consolidation though, and I would more rather likely like to buy the pair on a pullback from this move higher, initial move higher from 78.25. So basically, it'd be a pullback 50 pips lower at right about the consolidation zone. So any pullback towards like 78.90 level would be a good spot that I would consider buying. But we do have support at 79.15, so it would probably be a quick spike and then a move back higher. Let's see. Let's look at those yen crosses I've been talking about. A one-way street higher. The yen, the euro, Japanese yen, as we were looking for any move above 96.70, has been moving higher. It's trying to move up to 97.80. If anybody is in this trade, definitely put my stops to break even. I would have actually probably take profits right here, right at the highs. Or at least take half off, look for a continued move higher. If right now the market's mid-range, the only thing I would do, and I'm not even saying to do this, is you could go short and have your stops above this 4-hour candle. You can minimal risk, where's 20 pips, look for a move back down to the 96.70 level. The Great Britain Yen Cross is making a break into this higher range after completely completing the trade from 121.70 up to 124. That's a nice move. The pair is now 42 pips above this range at 124, and looks to be pushing higher. Any move back down to 124 could find buyers. That's what we're going to keep an eye on, see if we can get a move back there, and maybe look for a bounce higher. The Aussie Yen, it's similar to the Euro. It's close to the highs of the day. What we would want is a move back down to the 82.40, or more specifically, let's say the 82.20 area, and that's what we would consider purchasing into this pair. Right now, if you wanted to do anything, I would stand aside, or you could go short if you have a short bias on the yen, and I'd put my stops above the 82.30, probably the 82.40 area, looking for a push or a retraction down to 82.20. Let's check out our last two. The New Zealand yen. This crosses into the resistance zone. You could go short right here, right now, and just maybe you'd have to put your stop all the way though onto the top of the resistance zone. So it's going to be a wide spread, and you're looking for a move down to 63. So you're going to be risking maybe 40, 50 pips to make 100. I don't know if the risk reward in that trade is worth it. But you could also wait for to see if the pair pops up higher, so 64.25 area maybe, and then try the same exact trade. You get a better risk reward. And let's see, the last pair we're going to look at is the Canadian JPY. Now this trade also, as many traders, if anybody took this trade, we were talking about it last night, above 79.10. And we have hit our target now at 80.20. And now it'd be interesting to see if the pair can push above that level, or if we get a pullback of sorts. It is a short candidate at this point, where you could go short above with your stops above 80.20, looking for a move lower. That is the roundup. So basically, the yen is the pair that we're watching right today. We have had muted price action in the other majors, and we're keeping an eye on the building housing starts and initial jobless claims that are going to come out at 8:30. Keep an eye look on the Twitter feed. I'll send out any trading ideas that I come up with, or actual trades that I'm participating in. And everybody, good luck trading, and let's try to break on through to the other side.